Welcome back, Alpha Hunters. Hope everybody is doing well this week. We did actually get some pretty good movements on the market this week. Not like last week; it was kind of mellow. Not too many catalysts kind of going on last week, but this week we got some catalysts going, and the market started moving. So let's dive right in to what went on this week. Monday, we saw a pretty good gap down. Now, if you remember in last week's video, we did not trade last Friday, right? And we saw this Fed balance sheet data come out a little bit lower last Thursday after the bell. So we actually didn't have a trading day where that actually impacted anything. So we actually had a gap down from that. I wonder how much of that Fed balance sheet reduction kind of impacted this gap down here on Monday, but it didn't really matter. The market seemed to kind of shrug it off and kind of slowly grinded higher. End of the day, actually just positive on Monday. Tuesday, we kind of had a little bit of a gap up, a little bit of a trace back down, pull back, and then slowly pushed higher. A little bit of a sell-off right at the end as we got into then Wednesday morning was CPI day. The market also had a hard time getting through the blue box zone. If you've been on live stream or you've heard me talk about the blue box zone before, I was like, this is going to be a very, very strong, hard resistance level or support level if the market ever got here. And we kind of saw that this week. Wednesday morning, CPI came in, and total inflation actually came down a little bit. It came in at 5% compared to 5.2%. Core inflation was actually the same as the forecast. It came in at 5.6%. So we saw the market actually gap up a little bit, but traded lower very quickly. Okay, the first hour and a half of the trading day came all the way down. Actually took out Tuesday's low, and then it kind of just stopped for a bit, for about 10 minutes, and then just kind of started slowly rally. And once it got up into this zone, I kind of figured we're going to have probably a push higher, maybe to 417, 418. We can look at the daily chart here a little bit later. But then we got to the FOMC minutes, which was also on Wednesday afternoon. And they happened right here at 2 p.m. Eastern. And when they came out, it was found out that they actually had a presentation from the Fed, some Fed staffers at the last FOMC meeting about recession is most likely possible later in the second half of the year due to the banking issue that has now kind of spurred up a little bit of a credit crunch in the credit markets. So the market didn't like to hear that, obviously. Anytime you mention the word recession, the market just kind of rolled over with it and rolled over pretty hard as we went into close. But what's interesting about the mention of recession in the FOMC minutes compared to back at the last FOMC press conference back in mid-March is, well, the banking issue from the regional banks was so fresh that I was kind of thinking about this later on Wednesday night. And I was like, I don't think I remember anybody asking a question or even Jerome Powell even talking about a recession or even mentioning the word recession. And I don't think anybody in the press corps even asked about it, so, which was interesting because most of the questions were about, SVB, banking regulations, what failed, what didn't. And there was a lot of that kind of stuff. It wasn't really about the economy. Some of it was, tightening of the credit markets, but nobody, I don't think really anybody asked anything about recession. I could be wrong about that, but I just remember that it definitely wasn't a main topic of that press conference. So I think Jerome Powell kind of skirted by that back in March. And I mean, here you go. It's coming out now in the FOMC minutes for, this week, but the market definitely reacted to that, but it didn't really matter. It didn't last too long. Thursday morning, nice little gap up, and it just kind of slowly ran into the bullish direction. Got through the blue box zone. It very choppily got through there and ended pretty much up at the daily highs. The last hour of the trading day was pretty much flat. I should also mention the Thursday morning, we actually got more inflation data that came out. That was the PPI that kind of came out and actually came in negative. The forecast was calling for it to be flat, but it was actually negative 0.5%. So that was one reason why we did have the gap up on Thursday. But Friday morning, we did get some earnings. We started to get some bank earnings to come in on Friday. We got JP Morgan, Citi, PNC, and stuff like that. So we have got into earnings season now. We're starting to get some of the big dogs. If you've been in the live stream, you know that we didn't really think the big banks were going to be as much of an earnings issue as probably the regional banks will be. Once we get past this next Tuesday, we'll get past the big banks. And so we'll see what the earnings landscape looks like after that. But we did have retail sales Friday morning that came in at -1%. The forecast was for -0.4%. And then 30 minutes after the bell, which you saw the market kind of sell off, which is really kind of a weird one. The consumer survey came out and it came in at 63.5 compared to 62 for the forecast. Really kind of weird that the market waited right for that time to then sell off all the way back down through the blue box zone, kind of wicked below it, double bottomed below it, and then rallied then for the rest of the day for the last like 2 hours or so. So that was a really weird one. Why it waited 30 minutes just for that time to then kind of sell off. And it wasn't like the consumer survey was like horribly bearish or anything like that. So just an interesting week. So we got some data to come in when it's going to be like earnings nonstop here for several weeks going forward. So just be ready to be looking for those earnings plays. All right, so taking a look here at sector rotation for the week. We can see financials did really good. They started to really come back at the end of the week. Why is that? Big financials had earnings on Friday. So they went from about fourth, performing about fourth, fifth best on the week, to being the top performer to end out the week, mostly due to the earnings on Friday. XLY, discretionaries did pretty good. Industrials did pretty good. Healthcare, XLC, communications, materials, kind of all in there, middle of the pack. Energies, tech, a little bit underperforming for the week. And then staples, utilities. Real estate got absolutely taken to the woodshed on Friday. XLRE. Oh my goodness. They just kept selling. Now they could not get out of their way until, you see this last about 45 minutes to an hour, this pop that came in. But man, they were just down all day and they couldn't get out of their own way. A lot of that probably had to do with some rates. The interest rates were climbing pretty good throughout the day. So yeah, probably had a lot to do with that. All right, so taking a look here at the week over week change for calls and put options. So this next Friday is going to be a big one. This is the big monthly expiration, April 21st. You can see quite a bit of activity still going on. A lot more puts being bought still out there. A huge expiration. You see by the line here, huge expiration coming out. So we're still seeing a lot of puts getting bought, even though the market was bullish. The market has been bullish like the past 3-4 weeks. So if you're definitely trying to protect yourself, hedge or be bearish through options, make sure you go out at least 6 months, minimum 6 months, which means you're probably going to October or later. Don't be on the near term. It's just not going to work out. We just haven't seen it work out for a lot of these guys for months now. The next big one after this next Friday is going to be May 19th, the monthly expiration in May, and then June 16th, the monthly expiration in June. So yeah, we're seeing some pretty good activity out there in the options world. So just going to be curious to see if everybody here is a sucker or if they're going to wind up being right eventually. But if you are going to play with put options or anything like that, give yourself plenty of time. The market has been very resilient. So I briefly want to kind of show off what next Friday's expiration, kind of like the stacking of options out there looks like. And the red line, puts, green line, calls. And so what you can see is there's a lot of calls kind of stacked in here around the 410, 415, even up to 420. I would have a hard time believing it kind of gets above that and holds by next Friday. So I'd imagine if we do have a push, it's probably going to be earlier in the week and probably come back down, or at least start to kind of retrace a little bit, maybe not push up and hold as much. But the max pain for this next week technically is going to be a 401. Not to say that we get down to 401, but under 410, maybe something like that kind of seems to make some sense. And if we take a look then for May, take a look at May 19th. Well, you can see there's quite a bit going on out there. There's quite a bit of puts going on. So basically the 400 starts to get real busy. That's where you see 400 is actually busy for the calls and puts. You can see where the highest open interest is for calls and puts, 400. So yeah, right there is going to be busy for going in all the way into May. We'll see what happens when we get out there. I don't think we crush off by then. And then taking a look here at June, a lot of puts down at these lower levels. Some pretty big spikes here at 420 for puts and calls. See some pretty good spikes here at puts for 400 and 390 and 380. So yeah, there's definitely still a lot of puts out there, but I just wanted you to see kind of the structure of the different ranges strike prices out there for some of these major maturities out there. All right, so this is a neat little tool. Kind of been showing this off on the live stream, but this really kind of helps you understand what the market's anticipating for rate hike decisions kind of coming from the Fed. Really, we're looking here at May 3rd, so that's about 3 weeks out. That's not far. Really, what we're currently at is around the 475 to 500. That's where we're currently at. And basically, the market is expecting a quarter point rate increase, about 25 basis points. It's roughly an 83% likelihood. And you can really tell day over day between Thursday, end of day, Friday, end of day, it really shot up about 16%. Seems like we will be getting that rate hike. You can also see it up here, rate hike, boom, right there. But what I'm going to do is I'm actually going to go forward here for the next few FOMC meetings, and we'll go to June, and really you can see 500 to 525. That's still the most likely scenario, leaving that FOMC meeting. So it seems like we're not going to get a rate cut until maybe July, right? Because even here it's still a 50-50, mostly on 50%, probably just going to hold at that level. But if we go to September, you can see that, we start to have a little bit more of a rate cut back down to our current level. So we're going to raise here 25 basis point at the next meeting, and we're going to hold then for June. We're going to hold for July, and then in September, seems like the market is anticipating a rate cut by then. So it's going to be interesting to see how that kind of plays out, because if the bulls, and a lot of the narrative that they've been saying is like, yeah, it's not as bad. Like it's soft landing or like a no landing type scenario. We're not going to have as bad a recession or things like that. No, if things aren't going to be bad, then there's no need to cut rates. So it kind of leads into a situation of then why are rates going to get cut? So rates only will typically get cut if the Fed really needs to step in and help out the market, liquidity, economic stimulus, that kind of stuff. So if they're not expecting hard times ahead, then there's no reason to really cut interest rates. But if things do go good, then the Fed's not going to cut rates, and then that just actually devalues equities even more by not cutting rates. Remember, equities right now are currently being valued on rate cuts that are coming in the second half of the year now, that are going to start in Q3, or at least that's what the market is expecting. So if they don't cut rates, that means valuation on equities is going to go down. Just keep that in mind. All right, so this is that Federal Reserve balance sheet update that they do every Thursday after the market closes, and it did tick higher this week, went up by 3.7%. I'm kind of curious on how much of this was banks pulling funds from the Federal Reserve to kind of shore up the balance sheet for the end of quarter. I'd be curious to see if this kind of stays up or trending in the upper direction, or if that was just a quarter end kind of thing and maybe it starts to trend back down. We'll find out here over the next couple of weeks. The VIX got absolutely crushed Thursday and Friday. You can see it really kind of fell off. I don't really want to see it get below 17. It almost looks dead sure it's going to break below 17. And if it does do that, I will show off something next week in next Friday's video, but it looks like it's about to do it. If it does do it, I will show off something in next Friday's video if it does. As for now, it is sitting right on that low that it made back in February. So we'll see how that plays out this next week. The dollar, the DXY. Okay, so we did have 3 days in the middle of the week, Tuesday, Wednesday, Thursday. I mean, it just came right down. It was trying to bounce last week. It just came down. It came down to the February lows. It actually snagged those lows Friday morning and then rallied super hard. This is one of the main issues the stock market actually was getting hit, because you had the dollar getting really strong after that first 30 minutes. And then you also had rates, the 10-year rate here, really kind of rallying through pretty good. We definitely saw some of those things that put pressure on stocks kind of move in the direction that puts pressure on stocks. So, we saw them move in pretty strong direction. Looking here at the 2-year yield, it also was rallying pretty good. So yeah, I mean, we were definitely seeing the yields move higher. Taking a look here at the 10 and 2-year inversion, It's still just in this choppy zone consolidation area. I'm still calling it kind of at the lower ends of it right now. So we'll see what happens here over the next week, if it breaks down or if it just kind of starts to slowly kind of move back into the bullish direction here. So GLD and gold strong earlier in the week, right? Very strong earlier in the week. A nice little gap down on Monday with the dollar being up, but then Tuesday, Wednesday, Thursday, dollar was down, gold was up. And then Friday, dollar killed it, gold did not kill it, it got killed. So yeah, it got crushed on Friday, and we'll see if it has a little bit more of a retracement. I would expect the dollar probably has a little bit more of a rally in it. So that's obviously going to continue to put pressure on GLD, the SLV, silver. So, if you're interested in getting into either one of these, I would just wait for a little bit more of a pullback, consolidation, good setup. Not trying to get in on this extension of a run that they've already been on. Definitely just be patient and wait. HYG, the high yield corporate bonds, definitely nice little consolidation today. Strong move higher on Thursday. And yeah, I mean, this thing looks like it's probably going to push a little bit higher. Might fully retest into these lows around 76 to 75, 80 kind of area, maybe 75, 70, something like that. So it looks like it's going to push a little bit higher, which, it kind of looks like the stock market wants to push a little bit higher as well. Looking here at the LQD, I don't know, man. The LQD is starting to look a little bit rollover-ish. I know I mentioned last week, kind of looks like a head and shoulders kind of forming here. So we'll see what happens with the LQD. But if this thing starts to break down, yeah, I mean, it's going to be kind of trouble for the stock market, as the bonds are going to start to really kind of lead the stock market into the bearish direction. But yeah, definitely not forming nearly as strong of a high here as it did to early February, especially compared to looking at like the S&P 500, the SPY, the Qs, that kind of stuff. So real quick, taking a look though at the S&P 500, the SPY. Yeah, I mean, just a lot higher than the LQD. So it looks like it wants to push a little bit higher. I don't know how much I'm going to trust it. I would definitely say, the more it goes higher, the more bearish and the more capital I'm probably going to put into some bearish positions. But, you got to be farther out in time. Be far out in time. 6-month minimums on put options. You got to wait to see a move, see what it looks like. If you're doing anything short term, I mean, it's just going to get chopped up. It was a super choppy channel, and it's just been choppy all year pretty much this year. So yeah, I mean, don't expect anything to be smooth, anything to be easy. Anything up into that 417, 418 area is going to be a death of bulls, honestly. It's going to be really difficult to get it much higher. Okay, and the first time we actually got to this red box zone, I mean, we rejected out of it really hard back in the beginning of February. So the red box zone is there because it's a very bad reward to risk in the bullish direction. It's very good into the bearish direction. This is why I did have this blue box zone here for a while. And if we do push, into the red box zone a little bit, the highest I could probably see us getting in the SPY is probably here to fill this gap that we had back in late August, all the way up to about 421, 422, something like that. That might make some sense, but we don't really need to fill gaps to the upside, because we'll fill them later on, in the next bull run. And if we are on a bull run, then we're probably going to fill it. I just don't like the reward to risk here. If we have a bad economic situation, well, that's not going to be good for equities, and we'll see a reduction in earnings and growth, and we'll probably go into the bearish direction. And the Fed will then have to step in and cut interest rates like what the market is expecting. But if everything's all good and we see bullishness continue, like economic activity kind of continue to progress, inflation continue to progress, then the Fed doesn't need to step in, doesn't need to lower interest rates, and then that continues then to devalue equities even more. So the market's pricing in price cuts in the second half of the year, but if the economy doesn't need help, they're not going to cut interest rates. So the only way to get help from the Fed is if the economy and things are getting broken, and everything's just in the toilet. So yeah, you're not going to get it both ways. Like, that's why the red box zone up in this zone, I really didn't think we would make it back up here again, but it seems like we're just going to go up into at least 417, probably early this next week, Monday, Tuesday. At that point in time, I'm just going to be adding a lot more bearish positions through puts 6 months out, and I'm just going to wait and see kind of what happens here in the next 2-3 months. So that's just kind of where I'm at with that on the SPY. And I want to just quickly show this. This is kind of a similar time period back in '02, the beginning of '02, where we kind of sold off on the market. It had a little bit of a double bottom, had a little quick run, kind of like what we've had over here over the past couple of weeks, back up to these highs that it put in back in like a December of '01 and January of '02. But it never, the high of all three of these peaks was this one back over here on December 1st. So it never did take out those highs. And, people were probably feeling pretty good about the market at this time period. They're probably feeling really good. And then it just kind of slowly started to descend. So even if you want to maybe get bearish, I would definitely say, wait, look for some sideways movement and then a breakdown. Like this is a pretty good spot right here where you got some sideways movement. You got a little bit of a hump off the 10 EMA and then you got a breakdown. So, look for something like that to maybe be adding into maybe some bearish positions, but that's what I'm mostly going to be looking for here over the next week or two or three is some sideways movement, and then just we don't hold the support, we kind of start to break down and that kind of thing. Take a look here at the Qs. The Qs definitely seem like they want to push a little bit higher. They have been a lot weaker than what you realize over the past 3 weeks. I know last week we looked at some of the comparisons on how some of the tech and risk on stocks have been doing over the past like 2 weeks and 3 weeks. They haven't been doing all that well. Really, outside of this week on Thursday, they weren't good at all. They really were not good. So it probably pushes a little bit higher. It'd be interesting to see if we take out this high from earlier in April. If it doesn't do that, and maybe the SPY does make a little bit more of a push higher as we get into, bigger bank earnings on Monday, Tuesday, going to continue to come out. We might see the SPY making another high and the Q's might not. I don't know. I'm going to be kind of curious to see how that plays out. And if we don't see that, it's going to be interesting. That's all I'm going to say. It's going to be interesting. It might be a good opportunity to maybe look to be risk off here on the tech area. That's really all I got for this week. It was a great week. We look forward to getting more earnings this next week. Going to be big bank earnings continuing for the first part of this next week. So Alpha Hunters, have a great weekend. Take care and look forward to talking to y'all next week. Alrighty, take care, Alpha Hunters.